Hello guys, welcome to A Train Parrot and to another episode of the Sunday Alpha, Weekend Alpha, call it whatever you want, but this is the only video that you need to watch this weekend in preparation for what's coming next week. And it's been a tough week, we have to admit it. I'm just kidding. For us, it's been actually payday. Yeah, if you are subscribed to the channel, if you've been watching the videos, if you're part of my Patreon community, Telegram, Instagram, or Twitter, you've been informed. I've been in a short, all the bullish consolidation, and in this video, I'm gonna prepare you in the same way I prepare you week by week. This video is gonna be long. It's gonna be packed with alpha, just like every weekend, every Sunday Alpha special. But yeah, you got two options. There are timestamps in the description that you can skip into general markets analysis, altcoins, Ethereum, BTC, explanation of what hit the fan on Friday, levels that we need to defend now to stay in a bull market, potential for the recovery, and a deep dive in the order book, liquidation pools. Everywhere else you go, they're gonna tell you magic numbers. In here, we're gonna use data-driven decisions, which is the only way that you can win against the market maker. If you just draw lines and you don't back that with proper information, you're just betting. Every now and then you're gonna make profits, every now and then you're gonna get wrecked. It's not the only way to make money, but it's the way that works for me. And I'm willing to spend my Saturday 2.5 hours to put out this video so you can continue learning how to don't take a single loss. That's what I've done in the past year. And this week, everybody told me that I was gonna get wrecked with that short. And once again, the parrot wins. Thank you so much. My God, Argentinians love to brag so much. If you like this type of content, hit the like and subscribe. Hit that notification bell to get notified every time I put out one of these videos. And I promise you, in the next hour, there's not gonna be that much bragging as in here. Maybe a little bit less. We'll see. If you're interested in PineScript, if you're interested in automating strategies, I got out my second episode of the workshop about PineScript. This episode is about how to write your first strategy. You're gonna learn everything step by step, 40 minutes heavy. So grab your laptop, grab the keys of the car, fuck off from home, find a coffee shop or somewhere no one bothers you, and take some notes and start practicing. Really worth learning these things. If you're gonna trade this week, make sure that you do it with a proper exchange. I am currently running a campaign on 2bit. 2bit is a non-KYC exchange that offers over 1,000 trading pairs with leverage everywhere in the world. Non-KYC or KYC, whatever you want. If you want to spend 30 seconds in depositing and starting to trade straight away, go non-KYC. If you like to do it the right way, go and do KYC. Happy for you. As soon as you open your account, $50 appear in your account. And if you deposit your own money to trade, which is advisable, you can get up to 30,000 in bonuses. Let's have a quick look at the news. Let's see what's going on in the past 24, 48 hours. Strategy could buy up to 7% of all Bitcoin. Sailor is saying that he's just going nuts. That's an 8 out of 10. Let's remember that I think he has like between 3 to 4% of all Bitcoin. So that means that he is planning to double down in Bitcoin acquisitions. Then we got two bearish news. Coincidentally, we have spot Bitcoin ETFs suffer 812 million single day net outflow, second largest ever. Okay, so that was a slap in the face, and people are saying that this has to do with some on-chain data, nothing to do with the tariffs. You may or may not have your political preference. This channel is not political, but let's call it by its name. This is not on-chain. This affected all general markets, the VIX, NASDAQ. We'll look into that in detail. There's no need to become political in here and start blaming and putting names, but we'll find an answer to that based on what the public opinion is saying. And I'll put a little bit of spices of my own opinion as well. 1 billion in long liquidations sends BTC below 114. Oh, wow. I will never have expected to get 1 billion in liquidations around here. Only shorts were getting liquidated. Who will expect to suddenly see 1 billion in liquidations? I've been repeating, guys, for 2 weeks in a row that after you hit 26% in the oscillator of liquidations, the most expected next scenario, which is not guaranteed, nothing is guaranteed, but the most likely outcome is a flip from this end to the other end. And that only means one thing: longs liquidated. And the largest number reading that we have from this indicator was in the beginning of the bull market, where we pinched 24% in the oscillator of shorts being liquidated. This time we went to 26, so we deserve going back into the median in terms of liquidations. And yeah, we got plenty of 1 million positions liquidated. You can see these 3 bars in here. One day it was 270, second 400, and then 500. So these are 12-hour candles. Therefore, in total, it gives you over 1 billion, slightly more than one day with longs being liquidated. We've been calling for this shift from around this time when we have the second bar in red, more or less. I want to be fair and I want to remember, but from around 14th of July, we say we should start liquidating longs, guys. I'm getting itchy. We were in a short in here. We didn't get liquidated and we took profits as soon as the longs started getting liquidated. And yeah, I updated all my community. I'm out of my short. I should have kept it and trail it, but I'm already working on my long at the moment. More info on that later in the video. Of course, if you are my Patreon member, you already received an email yesterday with the levels and all of that. You can join my Patreon just for $10 plus taxes. Stop complaining that you are not paying $10 because you pay taxes, because really that makes me extremely itchy. So since there is so much debate about what caused the correction on Bitcoin and people live in a bubble and think only Bitcoin, they don't see general markets, macroeconomy and all of that, which I understand is tough. When I did economy in the university, I had to do it 3 times because I really hated it at that time. I was in love with maths, physics. I did a PhD in computer science. And I really didn't like the idea of having to read the newspaper to understand all of these things about the Fed and all of that. But here I am, becoming 50-year-old, and I read about it every day. Who would have thought? I think my professor from uni that was teaching me economics 1 probably is jumping in the tomb of happiness now. Or Friday, global equity markets shed roughly 1 trillion in value. While Bitcoin fell about 3-4% from recent highs, investors across asset classes shift into risk-off mode, selling cyclicals from tech to stocks to digital assets and buying havens such as US Treasuries and gold. This abrupt rotation followed 2 converging shocks: surprising in the US labor data and fresh tariffs announced by the White House. So first, well, the tariffs. I say tariffs and I got tons of comments of people in social networks telling me, dude, you are so retarded. It's not about the tariffs. Nothing to do with that. Bitcoin crashed because of on-chain data. Okay, well, tariffs did affect general markets. Wake up. The VIX spike and reclaim the lost support. Now possibly it's going to turn into new support, and we need to really see if we are going to get such an expansion, because that really can hit the fan and spread shit across the whole planet. There were over 1 trillion in losses in general markets, and that's in a single day. I mean, Bitcoin is 2 trillion market cap, so imagine half of the market cap of Bitcoin is gone, wiped from the general markets, and you think it was on-chain data. Soft employment data add to the downside. Yeah, of course, we have a mixed bag on Friday. Of course, we have the unemployment up, the inflation up a couple of days before. Those are contrarian forces, if you want, against the rate cuts. One supports the idea of a rate cut because unemployment needs a rate cut, so there are further jobs, and the inflation needs the rate cut. So if they are higher, you know. But we had Trump complaining that the information about the unemployment was released to affect himself, but actually the unemployment it's precisely in his favor, but he doesn't understand that. Or maybe I'm missing something. Let me know in the comments. Again, not political, it's just something silly. There are some things I like about Trump, some other things I really hate, and I don't have any hair in my tongue. When I don't like something I say, that doesn't mean that I'm against the person. It's just the way people are born in South America. We say what we think, which is something that might shock you. Then we have risk of sentiment spilled into crypto markets. Of course, from the general markets into the cryptocurrencies, secondary catalyst and sentiment drivers, profit taking, definitely. There was a huge amount of profit taking. We continuously look at the SOPR every day, and we saw all these inflows from very old wallets that people constantly came. They took the time to come to my Telegram to inform me that on the website of Galaxy Digital, they publicly said, yes, we already distribute. And you believe that? Well, I guess a lot of people was born yesterday. We are in a market and people play ugly and dirty. Just the same day that happened, I went into ChatGPT and I say, well, if you sell 80,000 Bitcoin on a Sunday on low volume and you execute that in a single move, what is the expected move of Bitcoin for such an event? And he was saying at the very least 10%. If there is a huge amount of bullish absorption over a weekend, it could be something like 5. And that weekend we moved less than 3.5, I think it was. So rapidly I say, no, they are distributing over the week. They're going to take the chance. And whatever you think, guys, we continue to have this week anyways distribution. New inflows came in on Friday that reached a peak of 22,000. I also share on Telegram and Twitter that they were coming in two deposits of 16,000 into Kraken, although that one doesn't seem to be tracked into the block on the inflows in here because we only have 22, and on outflows barely 3,000. So the delta is huge, and that keeps pushing Big Whale Explorer into the areas of run to the hills, close the door, dig a hole, and try to appear dead. Well, of course, the liquidations is also a bearish news that completely shifts the sentiment and sets everybody in the completely opposite. If you were looking at Twitter during the week prior to the crash, everybody was swearing at you if you say that you are in a short or anything like that. Everybody went quiet, and all the people calling for huge prices to the upside suddenly are vanished. And now you get a lot of people saying, well, we might bounce at 70K or at 60K and stuff like that. It's just full of nonsense. The conclusion is it was a combination of shocks into the market. It's not just a single thing. Of course, there are things that influence more the crash than others. Personally, I think the tariffs put the last one in the coffin, and that was it. But at the same time, seeing all these deposits throughout the week, it was calling for trouble. And I'm not just going to sit down there and see tens of thousands of Bitcoin coming into an exchange, the Big Whale Explorer being in the red, and I'm just going to take along, aiming for the top liquidity. Remember that every time I said it is quite likely that we go into 2, the context of what I'm saying is I am in a short. Publicly, every day I say that in my video. If we go into 2 that has some probability, I have a plan to get myself out of trouble, to get out in a decent way, still in a small profit or in a break even before we go into 3 or something like that. That was not in the context of a long or telling you we're going to go into 2, let's take a long. You can take that information as, well, it's very likely, let's take a long, but I didn't take a long. Everybody knows that. And I'm saying that because some people come and say, you were calling for 125. Guys, you're not watching the videos, just zip it. We are forming in here after having broken down on the 4-hour time frame, a double bottom, very small in here after piercing the lowest level of percentile on the 4-hour on the RSI. We are also getting multiple signals coming in from the cross-fee ratio on the PNR 1, 2, and 3. They're all there. If you go back in time, those P's are typically in bottom informations. Like even this one that goes up 7% is still a local bottom, right? All over the place, there's double bottoms. And I think there is a good chance, guys, this is not guaranteed. And I'm already in a long and I'm going to explain the details of the long. But there is a good chance that we come back up just to give a kiss goodbye, a dead cat bounce, or we do a recovery. We're also forming this, I think is called butterfly pattern, and it's like a harmonic pattern that basically is calling for a bottom formation around here. So far it's not playing out, but we are accumulating from multiple angles levels of support. We're gonna see in the order book how much they are defending this level. People are speculating whether it's gonna hold or not. There are stronger levels below us, more attractive than this one, but there is a chance that before Monday or around that timing, we have a push up, okay? And I want to have an idea of how will it look like if we get a dead cat bounce. Because I am in a long and I want to be, if I'm in profit during a dead cat bounce, I want to get informed that I am that context. Because that means that I need to very quickly take profits, not be too greedy, get out, and then re-enter from lower. Otherwise, I need to average down. It's not the end of the world, but I much rather get in a better position and not missing the opportunity of that. Now, if we get a V recovery on Monday because of something extremely bullish or whatever, we also need to know what is the line that we can cross. And there are some levels that are standing out in here. First of all, to confirm the idea that we're going to hold these levels and that we are actually going to put on the table the potential for a dead cat bounce or a V recovery, the first thing that we need to do is regain 34.77, which is the global support that we just lost. If we don't do that now, if we stay within the lows in here, we are still in the middle of a falling knife scenario. That 34 at the moment is priced, let's see on the pricing here, is priced around 113,600. Is it likely? Is it possible? What do we have that can bring back the price to those highs and not just touch it, but actually turn it into support? How can we do that? Well, let's look. What do we have in the menu? We have a past week low that was 114.6 that we broke down. We have the confluence of this support in here with this rejection at around 115.7. Then we have some fair value gaps in here that could attract the price, but at that point we are starting to look a lot like a V recovery. If we get into here, we are getting very close to the point of control. If we go back to the point of control, we are pretty much saying, well, we reclaim the lost support, we're gonna go to the top of the range around 120, and we rinse and repeat everything that we've been doing already for so long, and we got bored of that range. So something tells me that if it's a dead cat bounce, that we need to see a rejection either here, either 116, or either somewhere in here, okay? You're gonna say, yeah, you're not telling me anything, okay? That is obvious. Yeah, but you will be surprised how many people don't know this. And there are tons of people that are here not to insult me, they are here actually to learn, and I'm here for them. You know, people that want to learn in the channel is the only motivation I'm doing all of this. The pros, I love them, okay? But I really like when someone tells me I didn't know anything. I was just doing just so much crap, and after 1 or 2 months of watching the videos and having to tolerate your ugly accent, I am paying myself for that torture now with big profits. Some people have bought a house. I'm not kidding, with the profits from trading after watching these videos. And that really makes a huge difference. You know, if this is not for you, it's too complicated, fair enough. But I'm going to explain all the scenarios. You can skip this part if it's not for you. Now we need to be devil's advocate as well, right? If we don't get that dead cat bounce, there are more interesting levels below. We have this 110. 110 is the previous resistance. Put a line there, yeah? Resistance, bullish order block, 110. Anchor VWAP from the previous all-time high, 110. Later in the video, I'll show you a few more, but don't tell anybody about those levels. After 110, we're gonna see tons of things resonating with between 106 and 107. So you have 110, 107, and where we are, 3 levels. And then we have a CME gap that we form over the weekend. We are going to form it most likely. But we can form 2 types of CME gaps over the weekend. We can form a bullish or a bearish one. How do we form a bearish one? Well, we pump from now into the end of Sunday. We pump like crazy into, let's say, 116 and higher, anywhere. higher than that, basically reclaiming support, and we leave an ugly gap again below, just similar to this one that we already just hit. We took that gap, by the way, guys, this week. So if we pump, we're gonna create another one, and maybe we go higher and then we come back to close that one later. That is the bearish one. If the price over the weekend goes lower, let's say over the weekend we crash into 107, crazy, right? Then we leave a gap like this, huge, that the price is really, really going to want to fill. And we call it bullish because from the low end, we have a motivation to come back up. So I'm tracking in Binance what is the price of that, and it's 113.9, pretty much 114, okay? This means that if price goes lower, I can maybe over the weekend add a little bit more of spice to my long to get my average, push it below 114, push it lower the more you can. Of course, not with all your capital, okay? 1%, 2% of your capital. You are a sophisticated trader. You're not using 100% of your capital to trade Bitcoin. Come on. I'm going to say it in an Italian accent. Come on, and like my friends say. Right, so downgrade for daily as well, because we have a daily global breakdown, which joins the party to the 4-hour that we downgraded yesterday with the first pinch. We got global support lost. We are below the CPR pivots. We got potentially an incoming bullish CME gap. That's just my bias. It could be a bearish one as well. On the daily, we have that breakdown. The bullish consolidation failed. I call for a bullish consolidation. I say, oh, this is a bullish consolidation. It's got highest likelihood to go up. Okay, fair enough. I'm going to have to add more at 125 if we pump and hold to my short and my conviction. But I tell you, it is a bullish pattern. But I'm in a short. People cannot get that. It's funny. Global support lost, hash ribbons by MACD bearish cross. Let's go now into the daily time frame and let's start with the CPR levels. Remember that we have new levels for pivots in the month of August. We said it was going to appear somewhere in here, slightly lower, where we are still with an uptrend of the pivots, and that is really positive, but with anything can happen within the month, right? So the model at the moment is kind of blind to what happened because it says we came down just to lose virginity, which is what happens when you test for the first time in the month the pivots. It's a very elegant model. We touch it in here, and in there. Every single month in the past 3 months, we lost virginity. Perfect. Very rarely you spend a whole month without any sex. Sorry, without touching the pivots. Sometimes I'm confused what this channel about. So now we lost those pivots and we are below it. You see, you have the B and the V. I hate that. I need to remember which one is which. And being below it, now we are testing it as a resistance. And the first support is located at 106. Whoo, 106. Where did I hear that? Think about it. Go back in the video. And if you're taking notes, you know what is 106. Now, if we remain below those pivots, after losing them, it becomes difficult to reclaim them if you stick below for a bit. And we are just in the first candle, second candle now, second day below it. If we lose those pivots and we reclaim them, since the past 2 months we've been testing the resistance, that's calling for testing the resistance once again. Now, 1 month must be bearish. I have that as a thesis between August and September. Is the most likely thing, guy, is not guaranteed. But between August and September, they kind of share these statistics, past performance only, that says, well, one or the other needs to be in the red. Rarely you're going to get both in green. In fact, we cannot see up until 2013 anyone. But, well, there's more history in Bitcoin, obviously. And then you never see those 4 months in the green, July, August in the green, and then September and October as well. Typically, September and October is the recovery of the damage done either in July, in August, or in both months, okay? Those are not great months together, okay? July is not a bad month, but together, sorry, I'm talking about August and September, and I'm confusing you. This column in here and this column in there, together as a whole, have always 1 month in the red. And the explanation was crap, but I hope you understood the point. On the daily, Yeah, we lost this pattern. Remember that we catch the pattern right before impact. We had the pattern drawn there and say, well, if we meet with that level around here, are we going to hold support? But we didn't. Now we are facing it as a resistance. We have the 110 also appearing on the daily. We have the top of the previous range at 107. Oh, previous range, 107. That rings the bell as well. Yeah, it's there. It's a bullish order block as well, 107. Take note. Now, the point of control is at 96 and the bottom of the daily range, the previous one, is at 85. Some people are seeing in here, I noticed that this is not my pattern, but they are seeing an ascending wedge, something like this, okay? I don't know, something like that, I think they did it. And I don't know if you can see it. I have plenty of patterns. Let me get rid of the previous one. Let's remove everything. So that pattern, people are saying if we lose 112, I think they were saying, or 113, then lights off, because this could come, to the bottom of the ascending wedge. That's the aggressive target, or halfway through to 95 to the point of control. And that will be a drawdown of 22. If we go to the bottom of the range, that's a 31, which is very frequent in past cycles. In this cycle, we did one of 31 in here. This one was pretty shallow, just a 12. So if we do a 12, that tests 107. Oh, did I say 107 again? Yeah. Then if we go from here to point of control, that's at 22, which we have plenty of those this cycle, and we have a few 30%, that is 85. The weekly after the market cipher bearish divergence, couldn't hold it, coming back down. The bulls have an opportunity in here, okay? I'm gonna be devil's advocate because I must be, not because I'm pointing in all directions and I'm all over the place. I mean, sometimes it is the case, but when you are a good trader, you always have to put both scenarios on the table and then make a decision and take a trade. And that's what I do. People think that because I analyze both scenarios, both bias, is because I'm lost and I'm just trying to say all scenarios so I'm right with one of them the day after so I can show off. I don't show off by being right. I'm not trying to forecast. I'm trying to make money, and I brag about the amount of trades I have in a row taking profits, not about being right in every forecast, because this is not a forecast, it's an analysis. Price in here, imagine it tests 109 or 110, which is the highest close on the weekly. That will revert all the upside in here, and it's a very, very painful and ugly retest. But if we were to do something like this and we stop in here and we grab some liquidity up until 107 and we reclaim, we close the body like this, and then we resume in September. If you look at this and suddenly you get into 125 or something, wouldn't you say that it makes a lot of sense? I'm not saying for forecasting, for, crystal ball reading, but the structure of the price will make a lot of sense for a bull market. You will come here very close to the bull market support band. You will do something similar to this. It's not very out of the ordinary to think like that. It's not because you are bearish or anything. It's just typical market structure. Not even bearish, in my opinion. We have a bearish cross previous weekend, and we show it in the Sunday special. And that print precisely right after we hit intra-candle the 72 RSI, which was the resistance that we talk about at the moment that we were doing the double bottom. We say after this double bottom, we reclaim, we put on the table 72 or all the structure of resistance that is in here. We left the label right there for months and we touch 72. It's not my credit, it's just RSI, guys. All the credit goes to RSI, but you need to know how to use RSI, of course. Yeah, you use it 30-70. That's like a baby using an RSI. Step up the game. Look, this is RSI 72, and we met with it very close. The price reached 123.4, and RSI 72 was 124.3. So just 1K away from giving a kiss to RSI 72. Now we need to be careful to put now a bearish cross in here. It could be coming if we continue in this direction. So watch out for that. If we get that one, probably we might lose the previous low in here, in which case maybe we're gonna come into 52. 52 is at 105. And guys, what a timing, what a timing. Look at this beauty in here. Oh my God, anyone has a camera. I need to take a picture of this and put it in a poster. Look, 1, 2, 3, 1 LS2. Say it with me, say it together. LS2. Awesome. What is this? 1, 2, 3. Oh, wow. Yep, this is leverage squeeze, guys. Leverage squeeze is flipping between yes and no, intra-candle, right? If the price moves, it's appearing and disappearing from the chart. And that is because we were here piercing the top percentile. And at the moment, it's repainting because it's intra-candle. So it's calculating that we just got out of piercing the lowest band for longs. We've been a few days with very little number of longs. And since this is coming out now from that, is with the price coming down, we're getting the confluence that makes this indicator fabulous. Look at how many signals we have in here. People say that I only show the latest, but you know, we can scroll back in time and you can get this indicator from my Patreon. There is a shop in the Patreon. If you go to the shop and you scroll down, you can access all the 100 different indicators, either by a Telegram charts or by Pine scripts. If you want alerts, if you want to use it with trading bots, I suggest you go for Pine scripts. If you are on the move and you want to just render the chart without having to do anything, not even needing a TradingView account, yeah, then go for the Telegrams. Or if you are a boss, you know, big chest, big pockets, get both. And then you support the best channel in crypto in the world. The sexiest accent across all YouTube. Utterly sexy. Right, so this is a signal, and it's a signal is bullish. I'm just gonna say it in plain English. It works really well. Do not put all your money on this, you know, but I'm already in a long and it's triggering at around 113. My average is slightly higher because I started building from before and I'm waiting for the price to move lower to add. Now, more amazing alpha for this weekend. I got you covered, guys. I have plenty of alpha that you're not gonna find anywhere else. If you switch to another channel, you're gonna watch all the clowns telling you now, oh, careful, we might go lower, when the whole week they were telling you that we are gonna go higher. Sweet yourself with those channels, come on. We are piercing the bottom of the SOPR. What is that? This indicator shows you people closing at a loss or people closing in profits. At the top end is in profits, at the bottom end is in a loss. Closing in a loss means that we are getting closer and closer to a local bottom. Let me zoom in here and show you that we are piercing the first percentile, not the second, so it's not an intense signal as it was this one in April, but it's starting to get interesting, right? So we need to be looking now for longs thanks to that, because there's been a fair amount of panic sellers. Where do you buy? You buy when there is panic. You don't buy at the top when people are on the other end. And Ethereum is on the other end. People were taking profits big, pushing and pushing against the top. So this meant that people were taking profits in the green, cashing profits. Whereas here, Bitcoin is already losing, okay? And that is probably a lot of retail. We are at the lows with Ethereum, but I think it could bleed a little bit more. We have a double top in there, so maybe Ethereum could push a little bit lower. And my Patreon community was asking me a few questions. I'm going to show you the questions because we need to cover them. If you're part of my Patreon community, you know, you are the spoiled one in this community. Before that, have a look at this. This is the article that now is fully public because every single trade I take has a journal of everything that happened from the moment I started the trade to the moment I add, I reduce, and eventually there is profit taking, and people being happy about it and all of that. And you can go to those articles and see all the comments that they were saying while the trade was still open. And you can read it and see if that is something that will work for you. You know, we opened the trade on 9th of July and we averaged up all the way. And then we ended up closing on the 1st of August or around that. So what are the questions? Non-farm pay massively reduced and possibility of interest cuts in September. Wouldn't that be more bearish for crypto? Well, there's two ways of seeing that. It depends on what cuts the rates, okay? If it's Powell, probably it's because something broke in the economy. He will do it as long as he doesn't have a bullet in his head or something pushing him. If he does it because he really thinks it's the right thing to do, he will do it because something broke in the economy. And at the time you get the rate cut, you could get also, or you will be potentially already in the middle of a massive crash in the market. So be careful what you wish for. If it is because he got his hand forced, markets wouldn't like that. And I think that's the wrong way to do it, because this Fed needs to remain independent, not because I like it that way, but because most of the institutions that are investing wants it that way. So it's just a matter of sense. It's not a matter of my preference. I see the rate cuts a little bit as sell the news, because if people know that it's gonna come with a high likelihood, it could bring the market up. But then the moment it happens, the market might be in a bad condition and it might just be a glass floor, meaning it might break. Are we still going to hit 130, or is that it for this market? Fair question. At the moment, what I'm doing is I'm taking it easy, right? So I'm taking a long, but it's not a large position. And I'm, as I explained in my article, the new one, the one that is part of the community, stays private until I close it. And I explained that I want to be in a long now, and I want to build up my long, and I want to build it in such a way that even if we are in a dead cat bounce, I'm going to get out a break even and then carry on with different positions, or maybe flip into a short if I see that weakness. If we see strength into October and we start, building structure, we build a double bottom, we have some targets that are technical to the upside that overlap with good liquidity and stuff like that, well, yeah, we can go into 130, possibly 150. I don't discard that. I'm not going to say that that's impossible just to look ridiculous at the end of the cycle with people telling me, hey, you never believed into that. I do believe into that. I'm still carrying my bag of Bitcoin, but I'm going to react to how the data looks once we move up to see if it's sustainable or if it's just a piece of crap and we just need to dump it. Want to know first? Join my Patreon and we'll let you know what I think. I'm not going to guarantee that I'm going to be right because I make mistakes. USDT and BTC dominance are spiking and alts getting smashed, broken weekly and daily trend. What are your thoughts and when this will slow down and alts can get a break? Well, we'll look into that a little bit at the end. Do you still have the longs versus shorts charts for BTC? I think Ashan is talking about the one I used to analyze in Trading Light. Unfortunately, that one is completely broken because the platform is broken too. So I cannot use it. I wish it was still there. It was really great alpha. It looks like we broke the 4-hour and daily support. We're expecting decent amount of down based on fair value gas and CME. What are the liquidation pools and ranges that we can go to? As it's the weekend, there is already a huge CME since Friday and it's going to be closed pretty soon, no? Yeah, correct. We are going to look into all those levels. We already happened to mention quite a few already, right? The 107, the 110. And yeah, we'll cover BTC, dominance, and the RSI and all of that. This week is a little bit more quiet when it comes to economical calendar. We just have the PMI and a few international events as well. We have the rate decision in the United Kingdom, but we've been reducing in other countries. It's only US that is very sticky with the rate cuts. If you haven't watched the video yesterday, the Fed reduced the balance sheet, which is not something necessarily bullish, but not by a lot. So we are still here in the area of no decision, no clear alpha, whether it's a channel up or down. We don't know because we are in the middle of this square. If we knew that it was going up, I will tell you in that case, it will be really bullish. If we really break support, that is a disaster as well. That might mean that we sideways for 6 months, but we are here. We are just in the middle. The M2 pointing down and liquidity entering into crypto, nothing really that significant. And the open interest aggregated built a double top, so did Bitcoin, but the open interest is still hanging in there. I wonder if it's gonna get into $38 billion or break that line and start to come down, deeper correction. And yeah, a little bit more alpha, guys. Remember, I mentioned that this rally in here, there is pretty much no spot, okay? Very little spot. We only have one day when spot was dominant. That was around 15th of July, but with the exception of that, we only have futures heavy or a little bit of balance. All these other rallies up were with spot dominant. And in my opinion, that really helps to build support, okay? And support means that once you reach the top, when you come down, you have a structure. That structure are the pillars of the spot holding the whole thing. And it's a little bit annoying to be on this wave up with no spot according to this indicator that might be, broken or whatever, but it's from CryptoQuant and from the author, which is Dark Fost. I'm not saying that you did anything wrong, but we need to put the patch before the wound. So far, this looks to be more on the side of this move here, because this one was also with very little spot. It was futures dominated. It reached all the way from 28 into 69, and then it entered bear market. I'm not saying that's the case, but I'm just saying there is an inherent weakness in this wave up. When you get futures, people take profits. When you get spot, you get a cushion there that holds the structure, meaning that it can form easier a bullish flag and then recover. We now have a structure built of futures. So think about that when it comes to the volatility to the downside. Worst case scenario, I'm wrong, but keep it in your radar. Don't trade hopium. Don't listen to other channels. There are plenty of good channels. Unfortunately, the ones that I like, they end up closing their accounts. Like, for example, Gallant Crypto was an amazing channel and they banned the account. Super sad about that, but those were one of the ones that I consistently was watching and I was learning from him. The rest of them are just pure crap. And as you can see with the move down of Bitcoin, we continue to have long-term holders going towards the distribution. But I think this indicator is not properly up to date because the price is still at around 118. So I suspect, well, let's have a look on Monday at this indicator again. I'm going to leave it in here because there is the chance that with the price down, long-term holders are reaccumulating. Let me see what I can find into Bitcoin Magazine Pro. Well, in here, the long-term holders are starting to build up, not by a lot, but, kind of slow down the move down. And now they could be accumulating a little bit. Don't get so excited that with a little slope like this, oh yeah, we're going to an all-time high again. But, it's good to see that they don't continue to distribute so far, because that will be a little bit worrying. And a little bit of credit, because in the past 2 weeks, we look at the MVT signal, and despite the fact that you only heard Waka Waka, I'm pretty sure that all the people heard that this was a bearish signal coming from on-chain data. So it did play out. It wasn't just pure Waka Waka or pure crap. The same with the signal from the active address sentiment indicator that we did an in-depth in one of the videos in the past. That was a classic signal and it did work to the downside. Distribution from Big Well Explorer, well, pretty much all the time it works. ETFs did a pretty decent distribution, 800 in here, but it doesn't do much damage, guys. Look, all the way up, there's been so much sustained inflows that 800 doesn't do anything. This is pretty much them just hedging against what could potentially come. And we have the first day in the red for Ethereum on spot ETFs as well. With 152, it doesn't do much damage. You can see the curve in black or the cumulative in green. It's right there. It's a slowdown at the very top. We are at 55 in grid. We spent the week in grid as well, but very close to that 75. And the warning cell with the golden cell, again, deserves a round of applause. The last time was in here. We have some drawdown, in here some drawdown. This started quite early in this candle at 80 and the golden cell print at 90, and then you get this area in here of all the bearish divergences, which is plenty of time for you to get the message. The message is always the same. It is, we are in the season where you need to be looking for exits, you need to be looking for weakness. Where is the weakness? Where am I being, rug pull in here? And well, eventually after a while it print a sell, we have a dead cat bounce, and then eventually we went into 74. So it was another good signal if you can interpret it in the right way. Liquidations, we took the short proximity at 114. We didn't take the 122. That was my risk in case we pump with my short. Got lucky to not need to add once again, but it wouldn't have been a big deal if we go into 122 and then still we got into 114. That will have maybe even more cash as long as we don't go in straight to 180, which I think is just too low likely to go in a straight line, of course, and then I get liquidated. Next one is here at 107. Have I ever mentioned that level? Okay, take note. Stop the video, take note. Important, 107. And take note of how many times we say 107, how many times we say 110. 110 in here doesn't have much liquidity from liquidity pools. That's a point against 110. And 122 and 130 are still there. Level 2 is still there. Remember that we did this week this exercise. We did the 25x. That 25x located right there is gone. It's all taken. If it was just for liquidity pools and we wanted to go lower, the next one in the long term at 25x is at 104. But if we bring in all the levels, it is at 107. And then if we were to go even lower, we have 95. So, well, if we can DCA these levels and then aim as high as we can get, well, that's kind of the plan. So is number 2 fully gone or number 3 fully gone? Well, I don't know. I don't have a crystal ball. All I can tell you is if we go there, we're going to take profits there. If we are coming that low, we start looking for resistance and we have to reduce the risk. But that's how we keep the win ratio in the way it is so far. Now notice that 120 in the past 30 days is the largest pool. We took all the pools down that were substantial. Now there is still a lot, but this is not tracking it because this only looks 30 days in the past. And I'm pretty sure that we haven't been at 106, maybe I'm wrong, in a month time back. Let's see how the order book looks because we want to notice if there's any level being defended, but always with a grain of salt because it's the weekend and over the weekend there is less volume, there's more manipulation and all of that. So this week was pretty much led by the purple whales. They did the right thing. They trade along up until the price got into 118. After that, they really dumped the position. All the other ones were still pointing up, so they were still in a long when the purple whales rag pull. They tend to be right most of the time, and from that point the price just carry on. The brown whales joined the profit taking, but they did it when the price was already 115, so they must have taken some loss because in here they still didn't open the long. They opened the long. They were very long in here. And at that point, they got wrecked and they took a loss. And the green ones, surprise, surprise, retail people getting wrecked, watching all the other YouTube channels. They deserve it. They should be watching better channels. Right, let's look at the order book on Market Monkey Terminal, which is a fantastic tool. On spot, we can see that there is some appetite to defend 112 into 110. So that is what we have so far to defend that level of 110. You can pick your poison, 110 or 107 or lower. I am kind of flipping whether I want to add at 110 or not. At the moment, we are also halfway through forming this double bottom in here, which if it breaks, it reclaims the 4-hour loss support on the RSI, and then we can get a move up into where we can find that resistance, which at the moment is at 120, where they want to sell spot. On futures, we get a cloud in here of demand, 143, 118. Lower, there is pretty little. We have a huge wall of delta affecting the shorts, 672K affecting the shorts. Open interest is at 110 and at 109. I cannot see below that in this chart, but that confluence with the 110 level. We normally go to levels where there's been a build up in open interest. We hunt those levels. This is different than liquidity pools. The chart looks the same, but it's different data. Is where did the open interest spike? And we have in here 400 million and 400 million. We also see that 500 million enter around here. Most likely that is a short, and in here 600 million. People shorting from there, people shorting from here, that push the price down. Eventually, if we turn back into bullish, we're gonna come back and hand those levels. In the way, we have a smaller level, which is when we lost the support of the range and price came back and people trade the rejection. At that point, they put 300 million in open interest aggregated across exchanges. And that is what could attract the price to go back there. That's a motivation for the longs to hunt the shorts that enter there. We have 3 waves of shorts. Primarily, there is more, obviously, 270, but this is 600, 500, and 300. On the low end, 400 and 400. Now let's see the order book, but remember, don't take too serious how they are defending now, because it's gonna change by Monday, and depending on how futures trade in general markets, that could also influence things. Longs are stepping back in. We are at 60. That is a reason to believe that potentially 60 could do the trick to complete the double bottom. It's not a lot. It's been at 74, it's been at 80 at some dumps, and that's the point. It found the local bottom, so maybe it does it, maybe it won't. And we are in a weekend as well, so if you want to make your choice, you're going to have to do it partially blind about this specific input. And on bid-ask ratio, you can see that we are in green in here, but with very shallow support. We have support between 0 and 1% below the price. We have decent between 1 to 2% and 2.5 as well. We are at 13 there in the reading, but it starts declining from 5 to 10. And it's actually negative 10 to 20 or 20 and below. That means that either above those levels of deviation, above 10 to 20 or 20 and higher, there's either a lot of selling pressure, ask liquidity at those levels, limit orders to sell, or that there isn't much cash on below. It's a ratio, right? So we need to look into the order book to see that. We just saw it. You can see how the longs are increasing in here, getting in the very light colors, just like it was around here. Sometimes it does the trick with a lot of longs and it bounces. And the defense in here is 1% and 2% with 84 and 82 percentile, decent. But as I said, 5 and 10, very little support or a very low ratio. Next huge liquidation is at 107. According to this chart as well, this is tracking just the 1 month. So another point of confluence for 107. And I'm inclined to think that 107 has the most confluence at the moment. That makes it attractive, but since it's a little bit lower, maybe we still bounce at 110. Don't take it for granted. So if you're looking for that golden entry, it's better to DCA a little bit here and a little bit there and not be left behind. You're not gonna get it perfect. I'm already in a drawdown, right? So I'm at my position, I enter at 115. So now I need to wait a little bit more to add. I tend to like to wait 10K, but if 110 is very strong, I can take it. And also over the weekend, I can add to average lower than 114, which is where is the CME gap. And that averaging down on the move up, if it's just a dead cat bounce that fills the gap and that's it, I take profits. I put a stop loss in profit and I protect my position. If it dumps lower into 107, I'm protected. So there's so many ways. In the video, I'm already recording over 1 hour and we haven't done general markets. We haven't done the altcoins, but you have the timestamps. If you want to skip to that, just go ahead and do it. Fair value gaps, there's plenty of motivation in here. Price has fallen so fast that it left fair value gaps. Those are going to attract the price in one way to clear those imbalances, but we are kind of work in progress in here, consuming the slippery area. Remember I say we can cross it very fast. Partially we've done that. A little bit of support there was in here, but then we did another long wick down. We are clearing some imbalances, but we are also leaving some imbalances there, which is mirroring what happened in here. So basically everything is turning from brown now into green, kind of in the same place, which is more or less how it works, the markets. All right, general markets, let's have a look at this. Let's start with the dollar, because very interesting in here that we are getting another rejection. This rejection is from the top of my falling wedge, so we kind of pierced that level by a few dollars and we got rejected from around $100. We managed to get there. We put a high bullish divergence with this specific candle. So now either we're going to play a little bit lower and we manage to get into 96, or eventually we should reclaim this area and start going up. That is what the technicals are saying for this. And since this put a higher high on the RSI, so maybe there is a little bit more bleeding in there, putting a higher low and then coming back down in here. And then this guy continues putting a higher high and then we get the breakout. Okay, so it could play out in such a way. This part of the video, I know many people drop, but this part of the video pretty much gave me most of the bias of my trade. Okay, I trade Bitcoin, but I'm not in a bubble. I look at general markets and I see what's going on, and I was calling for the dollar holding strong the momentum despite the fact that the price was in a bearish structure. And that is kind of making me feel, well, dollar might have a little bit of an upside in here, and that's going to bring a hiccup just in time for August, September. Gold, is about to close the week in a breakout in here. So there was a lot of struggle in here. 1, 2, 3, 4 weeks in a row of just sideways, where at some point during the week we were in breakout and then we came back below and below and below. This week, for the first time in a month, we could be in a bullish setup for gold. We bounced from the 21 weekly, which is another thing that I've been saying for months. If we correct in here, we should be going to the 21 weekly. Watch those videos. Ask my agent, have an AI agent that you can consult if you are in my Patreon and you have my indicators. You get also access to my Telegram channel, where there is a bot that consumes all the videos, all the transcripts, and then you can ask anything about any video in the past. And we literally did that, right? We bounced from the 21 weekly. We need to see if we hold this, and if next week we do a retest, or if we start speeding up on the breakout. Gold moving up means that people are getting worried about the things that are going on. It's a sentiment indicator as well as an asset. The VIX put in here a liquidity hand, guys. This move aggressive in a single week, reversing all of this and going into these highs of 50, means that the VIX is getting ready for an expansion. There is a chance that I'm wrong, of course, there's always is, but the likelihood at the moment is flipping into an expansion, at least a short to medium term. That means VIX going higher and some correction on NASDAQ and S&P and the ones that we are already having in crypto. We reclaim support, and hopefully it's not going to be of this magnitude, right? Because that is, another crash. This one needed a V recovery that lasted months. So if we do something like this again, let's look into the charts of NASDAQ and S&P to see what could be the impact for those that are the most important ones. And look at this. I drew the thing and I say, well, now with the rolling over, we are calling a little bit for a pullback in here, and it should look something like this. That is what we do after a V recovery. We have some pullback, and if we just do this, that is a very mild pullback. That's just 4%. Typically, we do a 6, 7 to up to 10% after a huge rally up in a V recovery in past V recoveries in history. If we did that, maybe we're going to get slightly lower with the RSI into 55 and maybe actually test the previous resistance of 22,000, or maybe the 21 weekly at 20,800 on the NASDAQ. On the S&P, let's see, same story, mimicking what the Russell and the Nikkei did before. We mimic in both ways. On the way down, for starting the recovery, we started with Nikkei and Russell. For the S&P, that came after, and then the Russell and the Nikkei started correcting in here, putting double tops, rolling over, and then the S&P and NASDAQ did the same. It's not always going to be like that. I'm not saying that, but since They are in the same kind of period. I'm expecting that coupling, maybe I'm betting on that to stay. And the S&P is now correcting. Let's see if we hold at 53. We were very close to get the full revenge rally. Maybe we can still have it. That will invalidate my thesis of now the correction deeper into the 600 or into the 579. Now, there are other more extreme analyses that I want to show you on the 2 weekly, which I still think there is a little bit of a chance of that, and it's better to be informed rather than learning too late. It's not guaranteed, but we have 3 cycles in here for the S&P where we break this support. In this one, there is anomaly because there is the COVID. This cycle, there is the tariff anomaly in here, but we break down and we ended up closing perfectly at the revenge. We've been for months talking about the potential to do so. Now we are 2 steps further for confirming that. We are not 100% until we get, a break of structure in here or something. It's very shallow, the rejection so far. We cannot count full victory and say, well, I told you so. No, but, 2 steps further for that confirmation. If we do that, we could get one of these corrections again. And from these highs, the correction should be something like a 50% from the lows, doing an extension on Fibonacci like we did in here, from the top to the lows, matching with that level of the low. This one matches with the lows of COVID, and it reaches precisely the 50% correction. In here is a little bit confusing to do it because I didn't know where it was going to stop, and we still don't know if it's going to stop the way up. But the theory is place it at the top, place it at the bottom, and the correction is going to go there. But here's the thing. From that top, we already hit that correction of 491. So are we going to do the same again? Something like this? Well, I'm speculating that if we need to do that, then the correction could be longer, okay? So hopefully I'm going to be wrong. I'm not expecting to see something like this and then here a double bottom and continuation to upside. I'm actually expecting if we need to go in here, then it's a little bit of recession looking like, more like what we see in 2008, right? That you put a high there and then you come back to that low. And if you come back to the same low with that correction, then you are really just looking for trouble. You do a dead cat bounce and then you get a correction of 57%. So let's hope that that is not the case. But if it is the case, there's nothing stopping me from shorting that once we get the full confirmation. And of course, Google and all the different stocks close in the negative. Let's go into the altcoins because I'm pretty sure that you are feeling the pain of the altcoin season. If you went to Degen in here, in my channel, publicly in videos, I say that I was distributing Ethereum into an altcoin season. Yeah, I did it, and I distribute 2/3 of my holding with an average of 3.7. I did it 3.5, 3.7, 3.8, and the higher we went, the more Ethereum I sold. I'm still holding a decent amount for a typical mortal, but I sold 2/3 of it, and I'm planning to re-add. And I should be now, instead of recording this video, looking for entries to add again my Ethereum. But if I do it this time, unfortunately, I'm going to have to leave the Ethereum in the exchange because I really want to trade it. I don't want to hold it and turn it into a red bag for the bear market. So now things are different. I'm looking for a final exit on Ethereum if I add. So let's start with others. What's going on with others? Let me see. Others versus BTC. It got rejected for the breakout. I already mentioned that in the previous video. For others in here, it's coming back down, but it's kind of still in a structure that looks okay-ish because it's up, down, higher highs, higher lows, reaching this fair value gap. Okay, fair enough. What I don't like is that this is a full red engulfing candle and in a single move is coming back down so quickly. But it hasn't broken the fair value gap. It hasn't broken the structure yet. The things I'm not liking at all is the looks of this particular chart. Looks very scary to me. You can see that we have the double top, we broke down the neckline, and this week we are about to close above the neckline, and that is calling for trouble, that is calling for further continuation into this resistance. Hopefully from there we get another ride for altcoins, but altcoins really, this is not the cycle for altcoins. We were expecting to get into 20 and 16s. Those were the realistic targets of an altcoin season, but we really need to have something coming in here to save us. I'm gonna look into the Bitcoin dominance to see if we are still in the range of additional upside for the altcoins. Ethereum got rejected from the monthly resistance and is slightly below the area of the breakout, right? So that is the resistance on the price and we are slightly below. We could say that we are still above the 3.4 support that is around here. But you know, Ethereum made a huge green candle in here, and all this move up there, if you look on the monthly, you don't see any move down, right? So in the monthly, you could do a correction in here that maybe could rose the $3,000 and still get away with going back into the top and finally breaking that level. And as you can see, the actual fractal from 2021 continues to play out by the letter. Now we are going up in here just like we did. If this continues, this is just gonna continue going up into 6%. Hopefully it breaks this pattern, because going into 6% is definitely gonna be ugly for the altcoins. Ratios, gold rejecting in here just like it did in here at the end of the previous cycle. Not great looking. Against VIX, now it's a fake out, right? It didn't break the model, it just pinched and fake out to the upside. So relative to what we did in the previous cycle, is just doing the same except for the fake out. Against the NASDAQ, nothing. We are just in the middle there. There is no breakout, no fake out, nothing. Against DXY, it was a fake out too. And now against the Federal Reserve, we finally get the final reading. It's not a retest, it's also a fake out. So all the ratios are agreeing that this escape from here that was tempting everybody to say that Bitcoin is entering into something special, unique, that has never happened and that will never come back to be the same, that we will never break below 115. I guess this kind of feels like a slap in the face, pretty much like Batman giving it to Robin. Who knows for what reason, but most likely because of thinking that Bitcoin is breaking models. So I'm gonna do a wrap up in case you watch the video too fast and you forgot the points. I think, guys, we need for the short term to think about 107 and 110 as very interesting points, okay? If you are not already in a long, those levels are very interesting. We are currently forming half of a double bottom, but there is a likelihood it's not gonna hold, just because 110, as I told you in the beginning of the video, is more interesting than the area where we are forming this bottom. We have a few signals saying that the bottom will form here, but if not, because 110 is too attractive, then we are gonna end up going back in here and pinching it for all the reasons I gave during the video. Now, if that level is still not the bottom, 107 resonated during the video many more times than 110, and there were even some reasons like the liquidity pools saying that 110 is not as attractive. So in a nutshell, the safest level at the moment to add over a weekend in the short term, even if it's a dead cat bounce after that or if it's a V recovery, is 107, but you might not get it, guys, okay? So you need to play your game, pick your poison, and take responsibility for what you do. I'm just giving you information, not advice. I do what I do and it works for me, but many people don't like it and it doesn't work for many people. I hope you are learning one or two things in the channel. If you do, hit the like, write a comment down below, that really supports the channel. Share the video with more people. And I'm playing the arrogant just because it's funnier and I have a better time recording the video on a Saturday. After all, I've been here sitting for an hour and a half and I still need to be another hour editing the video because my team doesn't work in the weekend, and I'm doing this thing for you guys. I could just literally sit down in the couch, scratch my balls and watch The Simpsons instead, but I still have work to do. So the arrogance is just fun. I'm having a laugh. If you don't get the sense of humor, if it's too black for you, I get it. I don't like the humor of other people. We're human beings. Thanks so much for watching. Enjoy the weekend. Touch some grass. Don't feel down about the losses. Everybody can learn to trade. And despite the fact I send a lot of really ugly black humor messages in the channel, I am here for one reason, which is to teach people. I just don't like the trolls, but that's another story. If you are here to learn, you're gonna get all my love because you are the main reason I'm here. Best luck. I'll see you on the next one. Bye bye.